You just heard the montage of chief executives speak that has been anything but clear. They're trading up. They're not trading down. They're trading down. They're not trading up. We don't see strength in the consumer. We see a resilient consumer. All of this. Bill, maybe we will start with you first on this macro picture. You're the former CEO and, president of a very large retail operation. Can you kind of tilt the scales one way or the other for us on what you're seeing?
Well, good morning, you guys. They're all right is really what the answer is, because they're looking at the world through their lens. Doesn't surprise me that Disney's not seeing trade downs. What's really happening is that the bottom third of households are getting hammered, just absolutely hammered. And they've got some government assistance typically, so they're finding a way to survive, and it's always been tough for them. The top end is starting to trade down just a little bit as they see sticker price shock. And where the problem is, in my view, is in the middle third of the economy. The middle third is really struggling. They don't have typically government assistance, and they're facing 35, 36% food cost increase since pre-pandemic, along with about a 30% increase in housing prices. So 67% of the price increase across their staples, taking a big chunk out of their disposable income. And we're seeing a shift toward, in that segment particularly, away from wants and into needs. And so if you're selling needs, you're seeing a pretty decent, resilient customer. If you're selling wants, you're kind of hurting.
Now, this is interesting. It's been an age-old story about the burden on the middle class in America. You're not making enough money to be rich, and you are not, at least, poor enough to get any kind of assistance at those levels. We've got Home Depot and Walmart coming up. They hit a broad range of the American economy. What do you think we're going to see, Jessica, with regard to those two reports coming up this week?
Yes, I actually do agree with Bill. In terms of Walmart now, they're heavily on the grocer side. So that is a priority. Again, that is where we have seen inflation the most. So they get the benefit that it is a value retailer. So again, also with them, they've been able to benefit that the higher end consumer has come down to them because of grocers. So they also have a lot more than they offer outside of discretionary. So that's very little. Because they've had more customers come through, they've focused more on beauty and those categories and strengthened them. So that's been beneficial to them. But then they also have marketplace that they're growing and membership. So membership at this time also becomes quite sticky. And they have the advertising arm that has allowed them to create revenue to reinvest into that huge technology strategy that they've been able to create. And again, keeps them afloat. So they have a very strong strategy. And therefore, the customer, they've been very close to the customer, so they know how to come at it. And I think in terms of Home Depot, they've been running a better business across the board. However, they're still managing in a very difficult category. So it's home. And because the consumer is very cautious in where they're spending, those bigger ticket items or those bigger projects are still on hold. So it's very small parts that they're taking in their home. Again, housing is very difficult, so we're not seeing the customers move. So therefore, you don't need those big ticket items to, you don't need a new refrigerator. You don't need all these other things at the moment.
All right, Bill, how much of this story between Walmart and Home Depot is going to be focused at least a little bit, if not more so, on what the interest rate trajectory is right now? I can see Home Depot being much more levered because of the housing market and everything else towards that interest rate trade. Maybe Walmart not as much because of the nature of that kind of spend. Where do you put interest rates and how important they are for the U.S. consumer, especially in that middle third, as you mentioned?
Yeah, I mean, it's interesting. There's, as Jessica was talking, I was thinking, there's almost this counter-cyclical thing with Home Depot, particularly as interest rates remain high. You've got a slowdown in the home buying market, or potential slowdown, because rates are high and prices are high, which normally you would postpone a discretionary sort of remodel of your home. But if it's all you got right now and you can't move into something else, there's an opportunity to improve your home or to make a home repair because you're sort of stuck in your home. And I'll be looking for some sort of comments around that with Home Depot. As far as Walmart and interest rates go, so much of their business is food, and so much of their business is in that middle third and down of the economy that interest rates and credit purchases are relatively low. So I don't think there'll be an impact with Walmart. As far as the consumer broadly goes, as long as rates stay high, the discretionary purchases will be limited.
We're going to give one final word to each of you guys, and perhaps, Bill, I'll start with you. How important is technological innovation to both of these stories for Home Depot and Walmart? How big of a deal is it going to be?
It's absolutely critical. Digitally enabled retail, whether that's online buying or and online delivery, or buy at home, purchase in store, or just facilitating a pure physical retail transaction, is going to be critical. Whoever figures that out is going to be the winner. And I think Walmart's more advanced than most on that. And
Jessica, final word to you.
I agree.
What's the stock that you think is going to be the best positioned this retail earnings season?
Overall, I mean, in this week, I'll say Walmart. But anyone who's best positioned at the moment, I think, is anything that is tapped into wellness, anything that is tapped into entertainment, because the consumer, what I do agree with, the consumer is spending where they feel is a priority. So entertainment, they're still excited. That's why they're still going out to eat. Might not be the cheapest, because there's entertainment, there's travel, and there's wellness. So anything of sport and beauty, those are still resilient categories.